Have you ever felt stuck staring at a chart full of lines, indicators, and numbers, without knowing where to start? Have you ever thought that maybe investing in the stock market was only for people with a degree in economics or who work in banks? Take it easy. You're not alone. A lot of people start out like this: lost, insecure, thinking they need to master 1,000 complicated techniques just to get any kind of result. But the truth is, there's a way to see the market that's much simpler, more intuitive, and above all, more effective. Today, I'm going to show you one of the most powerful strategies real traders use to make decisions every single day: price action. And listen, if you stay until the end of this video, you'll walk away with a clear understanding of how these techniques work, you'll recognize the most common signals, and, most importantly, you'll realize that you can start too, even from scratch. Just imagine the chart as if it were a battlefield, where fear and greed fight all the time. Every candle you see there isn't just a drawing. It's the representation of thousands of human decisions, made by people just like you and me, driven by emotion, expectation, panic, or hope. And when you understand this, when you learn to observe what the price is trying to tell you, everything changes. The price action strategy is exactly that: reading the price behavior, identifying movement patterns, and making decisions based on what's right there, clean, direct, without relying on messy indicators that confuse more than they help. And if this content is already making sense to you, click the like button right now. That tells me you enjoy this kind of content and helps me reach more young people like you who are starting out and truly want to learn. Let's go with an example that will make everything clearer. Imagine you go to the supermarket and notice that every time rice hits $10, it just vanishes from the shelves. That tells you something, right? It shows that there's a very strong demand at that price. On the chart, it's the same thing. When the price of a stock reaches a certain level and always goes up from there, that's what we call a support zone. And this isn't just a line drawn on a chart, it's a story. A narrative showing where the market finds buying strength. And when you identify that, you begin to act strategically. You start to understand that the chart is like a map, and those support and resistance points are very clear signs of where the price tends to react. If you've ever spotted one of these moves, even without knowing the technical name, comment down below with the words, "I've seen this," just so I know we're connected. Now, let me tell you something no one mentions at the beginning. When you start studying price action, you discover that the chart isn't just a reflection of the market, it's also a reflection of yourself. You begin to see your own emotions there: the fear of losing, the rush to win, the hesitation before entering a trade. And that realization is powerful. Because the real breakthrough happens when you stop trying to predict the market and start observing it with neutrality, with patience. And this isn't a gift, it's training. It's practice. As Sun Tzu said, if you know the enemy and know yourself, you need not fear the result of 100 battles. Here, the enemy is noise, impulse, anxiety. And knowledge is the key to winning. Shall we put this into practice? One of the most used strategies in price action is the breakout with confirmation. This happens when the price breaks a resistance or support level and, instead of jumping in at the heat of the moment, you wait. Yes, wait. Because many breakouts are false. The price might push through a zone just to lure in the impatient, and then suddenly drop. So what do? You wait for the breakout, observe the pullback, which is when the price comes back to test that level, and enter only if there's confirmation. This is called a break and retest. And this simple mindset shift, from entering on impulse to entering with confirmation, can prevent a lot of losses. Liked that insight? Then go ahead and subscribe to the channel now, because in the next videos I'll show these breakouts live on the chart so you can see how it works in real time. And there's more. Another pillar of price action is reversal patterns. Names like hammer, engulfing, or pin bar may sound technical, but I'll explain with a simple metaphor. Think of the market going downhill at full speed. Suddenly, it slams the brakes, hesitates, and starts showing signs it might turn around. That's a reversal pattern. The hammer, for example, appears when the price falls hard but finds buyers and closes near the high. It's like the market saying, "They tried to bring me down, but I came back strong." When you see this kind of candle forming in a support zone, it's as if the market is winking at you and saying, "Pay attention, because I might be changing direction." Being able to read these signals is like having a sixth financial sense. And if you're enjoying this clearer, no-fluff approach, hit the like button now. That way YouTube understands this content is valuable and shows it to more people. The journey of hidden orders. discovering where the sharks operate. If you're just looking at the chart for pretty candles, you're missing the real money map, the hidden order zones, also known as order blocks. These areas are marked by large buy or sell volumes made by institutions, the real sharks of the market. Unlike what's taught out there, the big players don't enter just anywhere. They create zones where they accumulate or distribute massive lots without drawing attention. And you know what's most powerful? You can learn to spot these order blocks based on certain price structures. These zones usually form just before major explosive moves, and the price often respects them when it comes back. Marking these regions and watching how the price behaves in them is like finding the giant's hideout. And when you learn to follow their tracks, you stop trading in the dark. If this kind of content is bringing you value, drop a like right now and comment, "I'm spotting the sharks," because just knowing this already puts you years ahead of most people. Few talk about this in depth, but gaps, those spaces that show up between the close of one candle and the open of the next, carry important messages. They indicate sharp shifts in market sentiment, usually caused by strong events like earnings results, speeches from authorities, or unexpected news. But what many ignore is that these gaps act like magnets. The price has a natural tendency to return and fill those gaps, which we call a gap fill. In price action strategies, identifying a gap isn't just noticing the absence of candles. It's analyzing the context. Did it happen with volume? In line with the trend? Was it in a zone of institutional interest? When you start to cross-reference this analysis with behavioral patterns on the chart, you begin to see what the average trader doesn't. And that gives you an edge. If you want a video just explaining how to trade gaps with price action, comment, "I want a gap class," and subscribe to the channel, because there's a lot of heavy content coming your way. Has this ever happened to you? You analyze the chart, see a clear pattern, enter confidently, and the price goes straight to your stop before reversing and heading in the right direction? Welcome to the world of stop hunting. This practice isn't a conspiracy theory. It's an institutional strategy. Big players know where most retail traders place their stops and use that to their advantage. They create fast movements to sweep those orders, gaining more liquidity for their own entries. In price action, identifying stop traps is essential. A false breakout in a critical zone, followed by a quick reversal with a strong candle, could be the sign that the big players just entered. And if you pay attention, you can ride that move safely. Never place obvious stops in obvious areas. Learn to think like the ones who move the market. If you've ever been hunted like this, comment, "I got stopped out hard," below. And if you want to learn how to protect yourself from these traps, hit the like button now, because the content that follows will shield you. One of the biggest traps for beginners is trading in a sideways market. You know when the price seems to go back and forth with no clear direction? That's called consolidation. And in this kind of scenario, the chance of getting stopped out unnecessarily is very high. The beginner sees any movement as an opportunity, but the professional understands that sometimes staying out is trading smart. During sideways movement, big players are either accumulating or distributing. And you, as a small investor, are just a speck in this game. The tip is, identify congestion zones and clearly mark them on the chart. Only trade when there's a breakout with confirmation. Never before. If you've fallen for this trap of trading sideways movement, comment, "I got baited." And if this content is helping you avoid common mistakes, hit the like button because that really helps the channel grow. A correctly drawn trend line can be your best friend. But it needs to follow two fundamental rules. Connect at least two well-defined lows, or highs, and avoid false touches. Most people draw lines based on any fluctuation, and then they lose all meaning. A good trend line acts like a rail. The price rides it, and when it touches, it usually reacts. Now here's the trick. Combine the trend line with price action. When the price touches the line and forms a reversal pattern, like a hammer or a pin bar, that's a potential low-risk entry point. This simple combo can completely change the way you trade. And if you want me to analyze some charts live using this method, comment "Analyze Live" below and subscribe to the channel, because that's coming in the next lessons. Do you know what makes a successful trader? Confluence. The combination of factors pointing to the same result. And in price action, this is pure gold. Imagine the following scenario. The price is at a support zone, forms a strong candlestick pattern, touches a trend line, and on top of that, volume increases. That's confluence. Several pieces of evidence pointing in the same direction. And the more confluences you have, the stronger your entry point. Think of it like a jury. If only one witness says the defendant is guilty, there's a lot of doubt. But if 4 different witnesses say the same thing, the chance of conviction goes way up. It's the same in the market. So don't trade based on a single signal. Look for at least 2 or 3 elements together. Want a full class just on how to build confluences on the chart? Leave a like and comment, "I want confluence." One of the dirtiest tricks in the market is the fake breakout. And this happens all the time, especially at support or resistance zones. The price breaks the area, makes it look like it's going to run, and suddenly snaps back hard, knocking out everyone who jumped in on impulse. That's no coincidence, it's manipulation. Many big players use this to sweep stops from small traders and accumulate positions at better prices. How do you protect yourself? Wait for the pullback with confirmation. Only enter on a breakout if it holds for at least one strong candle closing above the broken zone. And always watch the volume. A breakout without volume is just a whisper. If you've fallen for this trap before, comment, "I got tricked." And to learn more techniques to avoid losses, subscribe to the channel now. This is just the beginning. Did you know even nature follows retracement patterns? And in the market, it happens too. Fibonacci levels, especially 38.2%, 50%, and 61.8%, are used by traders all over the world to identify points where price may pull back before continuing the trend. But here's the difference. Don't use Fibonacci by itself. It needs to align with real support and resistance zones. If the price is pulling back within those levels and forms a reversal pattern, you've got an excellent entry point. Think of Fibonacci like a natural ruler, measuring how far the market breathes before taking the next step. And if you want to see how to plot these levels correctly with real examples, comment, "Show Fibonacci on the chart," and leave your like. It helps me bring even more complete content to you. Many believe that trading every day will bring faster results. But experienced traders know that less is more. Patience is one of the greatest virtues in price action. Sometimes, you'll spend days watching the chart and see no high-quality entry. And that's okay. Because consistency comes from good decisions, not from quantity. Think like an experienced hunter. He doesn't shoot at every movement in the bushes. He waits for the right moment, the right target. It's the same with traders. And the less you trade on impulse, the more you protect your capital. If this message resonated with you, comment, "I'll wait for my opportunity," and take the chance to subscribe to the channel. This is the right space for those who want to trade smart. Price action works on any time frame, but the behavior changes. In day trading, signals are quicker, requiring more focus and emotional control. In swing trading, decisions are slower, more strategic. A common mistake is trying to apply the same reading to both without adjustments. For example, a reversal pattern on a 5-minute chart might be noise on the daily, and vice versa. So understand your profile. Do you have the time and calmness to trade intraday? Or do you prefer to analyze calmly and hold positions overnight? Both work, as long as you respect the dynamics of the time frame. And if you want me to bring a practical comparison with real examples, comment, "Day or swing," and share this video with someone who's just starting out. A trader's greatest ally is reflection. Creating a trade journal where you record every entry, why you entered, how you exited, what you thought, what you felt, transforms your learning curve. This simple habit reveals invisible patterns. Maybe you always lose trading on Mondays. Maybe you profit more with pullbacks than breakouts. But you'll only know that if you record it. Price action shows you the market. A trade journal shows you yourself. And when you combine both, you become unstoppable. If this inspired you, comment, "I'll start my journal," and leave a like so this content keeps reaching those who need it. You can have the best technique in the world. You can understand all the patterns, read volume like no one else. But if your mindset is based on scarcity, anxiety, and hurry, you'll stumble. A winning trader knows that money is the result of good decisions, made calmly and confidently. The market doesn't forgive those who try to rush the process. And the difference between those who win and those who quit lies in the mind. Develop a long-term mentality. Study every day. Backtest. Improve your discipline. And most importantly, Invest in yourself. Because before you win on the chart, you need to win within. If this video helped you, subscribe now and share it with someone who deserves this transformation too. Your financial future starts with one decision: to continue. Now, pay attention to this. Nobody learns these things overnight. There will be moments when you make mistakes. You'll enter too early, exit too late. And that's okay. Mistakes are part of the process. But if you persist, study every move, review your decisions, and understand what the price was trying to tell you, you'll grow. You'll stop being a gambler and start acting like a strategist. And this applies not just to financial markets, but to life. The clarity you develop by observing the chart slowly starts reflecting in your routine, your choices, your self-control. It's like training your mind on the battlefield every day. If you've stayed with me this far, it's because you're truly committed to your financial growth. And that already puts you ahead of many people who just want easy money. But now it's time to act. Start with the basics. Open a clean chart, no indicators, and just watch. Train your eyes. Identify where the price stopped, where it reacted, what patterns repeat. And if you want to go deeper, stick with us. Subscribe to the channel, turn on the notifications, and follow the next videos. I'll show you how to build complete setups, manage risk, and even control the emotional side, which is what brings most beginners down. And now, I leave you with a question. If the market talks to you all the time, why haven't you learned to listen yet? Think about that. The decision to change is in your hands. And so is your future.